This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Wednesday, December 13th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. Let's talk precious metals. Over the last few weeks, we've seen corrective activity across the board in the precious metals markets as the market has been anticipating a Fed rate hike of 0.25%. Lo and behold, today we received the rate hike we were expecting, and like many of us expected, the precious metals markets reacted in a very positive fashion. If you look back over the last few years, December 2015 and also December 2016, both times the market put in lows, and after the Fed rate hike, the precious metals put in a base and then they started to race. A matter of fact, in 2015, we rallied from 13 all the way up to $21 in July. And then in 2016, we rallied from 15 all the way up to 1870. Now, what sits out on the horizon as far as 2018 is concerned? I look back and I think about where we were in 2002 and 2003. As the world was changing, as suddenly the United States was entering into a war on terror, and obviously the cost of this war was going to be absolutely astronomical. Sure enough, the cost of the war on terror and all of the other government expenditures that have taken place over the last 15 years has built up a massive debt here in the United States. And here we are in the midst of a Fed rate hike cycle, and we really haven't seen the proverbial genie in the bottle, which is inflation, get released. Now, the Fed said today that they weren't really fearful of inflation, yet they raised rates as I think they're a little bit worried about the overvaluation as far as historic norm is concerned in the stock market. Now, you might wonder, why did precious metals rally in a big way if the Fed came out and said they weren't fearful of inflation? Well, the bottom line right now is it looks like the corrective activity from the 2011 highs in both gold and silver may have put in a bottom in December of 2015. And if that's the case, this recent base that we've been putting in both the precious metals may be providing investors an excellent entry point for a long-term safe haven investment. Remember, precious metals typically move higher when inflation kicks in, but before it kicks in is when the best time is typically to buy. And what we had over the last few days is we had silver trade as low as $15.60 and gold trade as low as $12.38. Today, gold rallied $16 after the Fed announcement, and silver rallied all the way up to $16.13 from a low of $15.60. So that's a 53-cent rally in one day, and it may be just getting started. Now, what sits out on the horizon? We obviously have a debt situation throughout the world, and what we've seen is major quantitative easing here in the United States, over in Europe and Japan. But the bottom line is, once that quantitative easing ends, who is going to be out there that is willing to purchase government debt at extraordinarily low levels as far as interest rates are concerned? And I think a lot of people are fearful about what will be the major problem, and that problem is sovereign debt. The United States in the first quarter of 2018 is going to have to float approximately $500 billion worth of paper. What if there's no buyers for that paper now that the Fed is using quantitative tightening, not quantitative easing? Could we start to see the dollar drop precipitously as the fear of debt once again starts to set in, and the stock market and real estate markets put in a top and potentially roll over, and money moves back into the commodity markets and safe haven. Now may be one of the greatest times to own gold. If we are on the brink of another major leg in what we consider a 30-year super cycle that bottomed in 2002, silver and gold could be really getting ready for a major move. Obviously, if you buy precious metals, you own it, you take delivery of it, the risk is minimal, and the reward could be extreme. But give us a call so we can talk to you about how precious metals can fit into your portfolios based on your individual needs. Thank you.